Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today we will take a look at the Canadian dollar because our major currencies that we are tracking in recent time is Euro currency, Japanese yen. Right now is forming the interesting setups, but these setups haven't been completed yet. So the patterns that we have discussed in our recent weekly research on the Japanese yen are still possible, but market just had not sufficient time to create them, and this creation is still continuing. That's why since they haven't been done yet with this setup, today we'll take a brief look at the Canadian dollar, since we haven't taken a look at it approximately for 3 weeks. And analysis that we have prepared in last weekly research is still valid, but it right now is coming to the end. It's almost over, and it will be very interesting what will happen after that. That's why today we'll just remind you what we have discussed in recent weekly research on the Canadian dollar and what could happen after that. So on the Canadian dollar, we start from the weekly chart because the major setup stands on the weekly chart. When market has reached some significant resistance and weekly and monthly overbought, we said, well, some retracement is possible here, and then market has formed this perfectly looking, as you can see, bearish engulfing pattern. This pattern has led us to assume that the retracement will be approximately the confluence support, because we know the classical rule of the trading of the engulfing patterns that the minimum target that market could reach as a rule equals to the length of the bars of the engulfing pattern. So if you will calculate this length, count it down to the downside, you will get approximately the target that market could reach, and this target stands at 135.40, 136.30 confluence support, and mostly at the lower border of this confluence. At the same time, guys, we see that market right now is oversold on the weekly chart. That's why Canadian dollar right now is a bit limited with the downward potential, and hardly market will reach this area at the blink of an eye. It's very fast. Probably it will take some time to reach this area. But currently, guys, we see that the crude oil prices are rising, and this makes the support to Canadian dollar and makes really possible that market could reach this area till the end of the week, because the crude oil right now behaves really well. What will it mean for us? This will mean that market will come to some turning point, because we know that on a monthly chart of the Canadian dollar, market hasn't quite reached the final target, and this target stands approximately at 154. It's a bit far, and it's not really the fact that market will definitely reach it, because the reaching of the 154 area assumes the dropping of the crude oil prices to an area around $16 per barrel, or even maybe somewhere in this that sort. We have some extensions on the gold on the crude oil that suggest that market really could reach it, because all-time ABCD pattern to the downside that has started right from the top before the 2008 crisis, and if you will build and if you will draw the ABCD pattern down, you will get the 100% extension AB equals CD target approximately at the $16 per barrel, and that will correspond approximately to 154 on the Canadian dollar. But currently, guys, this marking this level is so a bit amazing, and it's difficult to imagine currently that market really could reach it. Although if we will believe to facts and to pure numbers that the technical analysis brings us, is probably it's really could be done. That's why currently we still keep in mind this possibility, and that's why it's very important what will happen right at this confluence support. Yes, the first leg of the retracement will be done, but what will happen next? Either market will continue move to the next target, or we will get some kind of the compounding retracement down if the crude oil prices will continue the upside retracement. That's why from this standpoint, I would like to say that market is coming to some crucial point that should clarify further direction. And this point stands around 135.40 areas, confluence support on the weekly chart. This will simultaneously will become the completion point of our weekly research that we have prepared on the Canadian dollar. So that was the destination that we would like to get, and we have discussed this target. So on the intraday charts, guys, on the daily 4-hour time frame chart, I will show you the 4-hour time frame chart. Market stands with this a bit steep ABCD pattern. So you can see that BC leg is very small, but market holds with this pattern very well. So take a look that ABC top 100% extension has been hit. Market turns to the upside retracement here. But pay attention to the acceleration down that has happened right before the market has hit the 100% extension. Usually, such sort of accelerations leads to further downward action, to moving to the next target. The next target of this ABCD stands at 134 area, 1618 extension, but this target stands a bit below the 135.40. That's why I'm not sure that market definitely will reach it. Maybe we should be focused on some kind of the 127 extension. So here we maybe should be focused on the 127 extension of this ABC pattern rather than 1618, because the 1618 currently is really small. Odds suggest that it could be hit mostly because the market, this target stands below the confluence support on the weekly chart, weekly oversold. That's why the hitting of the 134, it really will demand some significant events on the markets. For example, if crude oil price will skyrocket, in this case probably this could happen. But the current environment, the chance that it really could be reached, not really significant. Besides, as you can see, the engulfing pattern suggests moving to the 135.40. The ABCD 127 stands approximately the same area. This potential butterfly on 127 extension, 127 target also stands on 135.40. That's why it seems that 135.40 area is the most probable destination point on the Canadian dollar in the short-term perspective. 134 even, well, it may be, but it needs some catalysis from some external factors, external events. As I said, the crude oil prices, some other events of such kind, so of this kind. It's not absolutely impossible that could be hit, but the odds significantly lower than probable hitting of these targets. That's why, guys, it seems that the 135.40 area is most probable destination point in the short-term perspective on the Canadian dollar. And after that, we will see what will happen, how market will react on this confluence support, and whether it will be some compounding ABCD down if the crude oil price will continue to rise, or this will be just one leg retracement and the market will continue action to the next target to the upside if the crude oil price also will turn down.